But between the property taxes and the fertilizer costs, insurance.
Assalamualaikum and good morning to Madam and fellow classmates. We are representing the tax advisory team assigned to review the tax position of Mr. Amin Rushdi for the year of assessment 2025 in accordance with the Income Tax Act 1967. Our objective is to assess Mr. Amin Rushdi's tax position and determine the correct amounts of income tax payable based on the information provided in the case study. As tax advisors, the first step is to determine the taxpayer's residential status, as this directly affects the applicable tax rates and the tax relief that the taxpayer is entitled to claim. Once the residential status has been established, we will proceed to analyze his employment income, calculate his chargeable income, and finally determine his income tax payable for the year of assessment 2025. I will now begin with Mr. Amin Rushdi's residential status. Based on our review of Mr. Amin Rushdi's travel records and the provisions under Section 7 of the Income Tax Act 1967, we determine his residential status for each year of assessment as follows. For YA 2022, Mr. Amin qualified as a resident under Section 71B. Although he was physically present in Malaysia for only 163 days, his temporary absence due to his mother's surgery is treated as an approved temporary absent. YA 2023, he remained a resident under Section 71B because his 178-day stay was linked to another qualifying period, including 12 days of approved temporary leave. YA 2024, Mr. Amin qualified as a resident under Section 71A as he physically present in Malaysia for 186 days, which exceeds the minimum requirement of 182 days. Finally, for YA 2025, he qualified as a resident under Section 71C because he was present in Malaysia for 177 days, including a continuous period of more than 90 days, and he had already been a resident for 3 of the 4 immediate preceding years.
Assalamualaikum and good day everyone. My name is Puteri AFIFAH binti Muhammadiyah. Today I will explain the calculation of Mr. Amin Rushdi's statutory employment income for the year of assessment 2025. I will determine which employment benefits received by Mr. Amin are taxable and calculate his statutory employment income according to the Malaysian Income Tax Act. So firstly, we look at Section 31A, which covers cash remuneration. Mr. Amin received a monthly salary of 12,000 ringgit, giving him an annual salary of 144,000 ringgit. Next is his travelling allowance of 2,000 per month. Under the Income Tax Act, the first 6,000 ringgit is exempt from tax. Therefore, only 18,000 ringgit is included as taxable employment income. He also receives an entertainment allowance of 80,000 ringgit and a food allowance of 12,000 ringgit per year. Both of these allowances are fully taxable. The reimbursement for attending a work-related course in Malacca is fully exempt from tax because it is directly related to his employment. Therefore, no amount is included in the taxable income. However, the reimbursement for laundry expenses during his leave passage to Tunisia is fully taxable, so 1,200 ringgit is included. Mr. Amin also benefits from an employee share option scheme. The taxable benefit is calculated based on the difference between the market value and the option price, resulting in a taxable amount of 4,000 ringgit. As a result, the total employment income under Section 31A is 119,700 ringgit. Next, we move to Section 31B, which covers benefit in kind. Mr. Amin is provided with a company car and petrol with a taxable value of 15,950 ringgit after adjusting for the 11 month of usage. He also enjoys a company driver worth 6,600 ringgit and individual membership to the weekend recreational club valued at 6,600 ringgit also. Next, a taxable leave. Next, a taxable lift passage benefit of 6,000 ringgit and a fully furnished condominium with a taxable benefit of 3,080 ringgit. The total benefits in kind under this section amount to 38,230 ringgit. Moving on to section 13(1)(c), which relates to the living accommodation, the taxable value is determined using the lower prescribed method. In this case, the taxable accommodation benefit is 36,000 ringgit together with a hotel benefit 490 ringgit, giving a total of 36,493 ringgit. There are no taxable benefits under section 31D and section 31E. After adding all taxable employment income and benefits, Mr. Amin's gross employment income is 271,923 ringgit. Finally, we deduct the allowable employment expenses including entertainment expenses, travelling expenses, professional subscription fees and nominal rent amounting to a total deduction of 53,200 ringgit. Therefore, after all allowable deductions have been made, Mr. Amin Rushdi's statutory employment income for the year of assessment 2025 is 218,723 ringgit. That concludes my explanation on the calculation of Mr. Amin Rushdi's statutory employment income. Thank you.
Today, I'll be presenting the business income computation for Aura Venture Service. There are also a few expenses that are fully allowable, so no adjustment is needed. This includes the employee annual dinner, TM Unified subscription, and also corporate gift with the company logo, as they were incurred for the business purpose. On the other hand, expenses such as the 21,000 donation, depreciation, office renovation, office equipment are add back because they are either capital expenses or not deductible under the tax law. For the legal fees, no adjustment is made because the expenses were related to tax matters and debt recovery, which are considered as allowable business expenses. The business also qualifies for double tax deduction on the structured internship program and international trade fair expenses, as these are approved tax incentive provided by the government. Lastly, after deducting the capital allowance and add the balancing charge, the statutory business income for Mr. Amin Rushdi for the year of assessment 2025 is RM 282,450. So, in conclusion, this computation ensures that the taxable business income is calculated correctly by making the necessary tax adjustment in accordance with the Income Tax Act 1967. Now, we move to the Industrial Building Allowance computation for Fit and Fun Recreation Centre for the year of assessment 2025. Industrial Building Allowance, or IBA, is a tax relief given to businesses that build or purchase industrial building used for business purpose. For this case, the total qualifying building cost is RM 505,000. This amount includes the architect fee, cost of preparing the plans, construction costs, and the installation of water and also electricity. However, the cost of land is not included because it does not qualify for IBA. Since only 80% of the building is used as a factory and the remaining 20% is used as an office, only the factory portion qualifies for the allowance. Therefore, the qualifying building expenditure or QBE is only RM 404,000. Next, the business can claim an initial allowance of 10%, which is RM 40,400, and an annual allowance of 3%, which is 12,120. After deduct this allowance, the residential expenditure, which is RE, is RM 351,480. This amount will be carried forward for future allowance claim. Lastly, there is no balancing charge because the building was not sold or disposed during the year of assessment. Last but not least, the industrial building allowance has been calculated correctly based on qualifying building expenditure, and the business use of the building or QBE is amounting to RM 404,000. Besides the industrial building allowance, we also calculate the qualifying plant expenditure or QPE for the heavy machinery. In this case, only the heavy machinery costing RM 50,000 qualify because the site preparation cost exceed the 10% limit and is therefore not allowable. Based on the QPE of RM 50,000, the business is entitled to an initial allowance of 20% and also annual allowance of 20%, resulting in a residential expenditure of RM 30,000. That's all from me. We move to the next presenter.
We'll go through to financial performance of Said and Associates, a firm providing secretarial services for 2025 year assessment. Okay, let's get started. So for the year ending December 31st, 2025, the firm reported a net profit of 50,000. So here we must find the provisional adjusted income. So what we can do is we can add the net profit with the expenses that aren't tax deductible. This includes like depreciation, donations, and partners' own salary and private expenses. So after this adjustment, our total will be 221,000 ringgit. Before we look at the numbers, it is important to understand that the Said and Associate Partnership is a conventional partnership where all the profits and losses flow directly to the partners, who are then taxed at their own individual rates rather than a corporate rate. For period 1, from January to September, we split the amount between Amin, Yazid and Anwar, the 3% partnership using the original ratio, which is we can use 8 to 7 to 6 ratio, and then we calculate. For period 2, we split the remaining 18,000 between only Amin and Yazid because Anwar has left the partnership. So the ratio that we use is their new ratio, which is 60 to 40 ratio. Finally, we must subtract the partnership with capital allowance 7,000, which means capital allowance is they dispose asset lower than the tax return, and we must add the balancing charge, which is 3,000 ringgit because they dispose the asset higher than the tax return rate, and then this remaining share is share between Amin and Yazid to the ratio 60 to 40 ratio. Conclusion is Mr. Amin we get RM 88 ringgit 971 ringgit. So to stay compliant with Malaysian tax laws, we have two final steps. The first is the firm must fill the form P, which is Borang P, which is this form they must declare their income for the partnership, and the second is income flow through to the partners, which is each individual partners must report their share on their personal form P tax return. That's all from me. Then I pass to the next presenter.
For my part, I will explain about other income, rebate and relief for the year of assessment 2035. Before I start, let me briefly explain what personal tax is. Personal tax is the debt an individual pays to the government based on their taxable income. The amount of tax is calculated after adding all taxable income and deducting eligible tax relief and rebates. Now, I will explain Mr. Amin Rushdie personal tax calculation. First, we calculate Mr. Amin Rushdie total statutory income. He has business income from two sources. The first is his sole proprietorship, Aura Venture Service, which give a start. After deducting allowable expenses such as squid ring, assessment and repair costs, his net rental income is 30,210 ringgit. He also received royalty income of 5,500 ringgit, but this amount is fully exempt from tax, so it's not included in his taxable income. After adding all taxable income, Mr. Amin aggregate income is 620,354 ringgit. Then we deduct approved cash donation of 25,200. This gives him a total income of 595,154 ringgit. Next, Mr. Amin can claim several personal tax relief. This include personal relief, medical expenses for his grandparents, medical checkup, lifestyle expenses, sport activity, EV charging facility, housing loan interest, life insurance, medical insurance, EPF contribution, and children relief. The total tax relief claim is 55,200 200 ringgit. After deducting this relief, his chargeable income becomes 539,954 ringgit. Based on the Malaysian income tax rates, his income tax liability is 120,000 ringgit, 788 ringgit. Finally, Mr. Amin received a zakat rebate of 25,000. After deducting this rebate, his final net income tax payable is 95,788 ringgit. In conclusion, after calculating all taxable income, deduction, relief and rebates, Mr. Amin Rushdie needs to pay 95,788 ringgit in income tax of the year of assessment 2025. Thank you. That's all for me. I will pass to the next presenter.
In conclusion, based on our assessment, Mr. Amin Rushdie qualifies as resident taxpayer for the year of assessment 2025 by applying the relevant provisions of the Income Tax Act 1967. We successfully determined his residential status and prepared the tax computation based on the information provided in the case study. Overall, this case demonstrates the importance of correctly determining a taxpayer's residential status, as it directly affects the applicable tax rates, eligibility for tax reliefs, and ultimately ensures that the tax computation is accurate and compliance with Malaysian tax legislation. That concludes our presentation. Thank you for your attention.